What does an 8% increase in inventory mean for the Missoula real estate market? Stick with us and let's find out. My name is Jeremy Williams with the Bannack Real Estate Group, and each month I try to bring you hyper-local information so you can make smart, educated decisions before you read about them in the local and national news channels. Why is this important? Well, often that information is incorrect. So to find out what's going on in our Missoula market, let's get into it. Right now, we're seeing strong activity for homes priced between 300 and 600, which accounts for most of the under contracts right now. Right now, there's 405 houses, which is an 8% increase month over month. However, homes are still selling quick, so that inventory has been staying in control. There's 156 pendings, which is a strong indicator that buyers' activity remains high, and 103 homes closed last month. One of the things I want to pay attention to is we're still seeing 3 to 5% appreciation. So home prices do continue to go up. One of the things I have constant conversations with buyers is they're waiting for the interest rates to come down. And I just want to put this in perspective a little bit. Rule of thumb, if you have, say, a $500,000 house, and let's just say your payment's going to be $3,000 on that $500,000 house. And if rates go from 7 to 6, 1% change, that should equate to about a 10% savings in your mortgage. So if you had a $3,000 mortgage and rates went down 1%, you're saving $300 a month or $3,600 for the year. However, on that $500,000 house, if you wait from this time now to this time next year, it's very possible that $500,000 house is going to cost you $25,000 more. So while you were waiting to save the $3,600 a month on your mortgage payment, you actually lost a lot of money in your buying power. So pay attention to that. It's really important that you talk to a lender, you talk to a real estate broker like myself who has a lot of experience, and we're going to sit down and walk you through when the best time to buy and how we can save you the most amount of money. Next, we have two graphs here. One's our appreciation rate, and one of them is our list to sales price. If you've been watching these videos, you know that I love to talk about appreciation rate. What I like about it is it gives us a strong indication of supply and demand, how many homes for sale versus how many buyers are in the marketplace. If you look at the graph, the orange line is on the 6 months line. Anything under 6 months is a seller's market. Over 6 months is a buyer's market. So you can see for the whole year, we've been in a strong seller's market. The closest we got to would be a normal market. That orange line really is what we call a normal market. It was in February, but we've been in a strong seller's market pretty much every month. So right now we're at 3.93 months of inventory, which indicates there's still a lot more buyers than are sellers. Next, we look at list the sales price. This is the correlation between what you're asking for your house and how much you end up getting. So in a normal market, you'd probably get 96 to 97% list the sales price on your house. If you had a $100,000 house, you get $96,000, $97,000 for your home. You can see there's points this year where we've still maintained 98, 99, 100% list the sales price. One of the reasons I put these graphs together is if you look at the absorption rate at the top, the blue line, and you look at the list of sales price at the bottom, every time we start trending up to that 3 to 4 months of absorption rate, you can see that the list of sales price down below softens up, meaning when we hit a certain line of inventory, then prices tend to soften a little bit or tend to be a little bit more negotiable. So that's something that we're definitely paying attention to as we head into the fall. Typically in the winter, what I expect is inventory to come off the market. A lot of people will wait to put their house on again next spring. And I also expect that list to sales price probably to normalize down to 96, 97%, which is going to create some opportunities in our marketplace. So you can see there's been a significant amount of activity since January and into October. The activity in our market starting in June has stayed relatively consistent. Of course, ranges between 70 and 140 homes per month, with the highest number of sales being in June, of course. New listings has been increasing, but that's also going to create some opportunities. And in fact, I expect to see our monthly sales to stay a little higher than they would this time of the year just because of those new listings coming to the marketplace. So what does this mean if you're a home buyer? Well, if you're a home buyer, look for this winter to be a great opportunity to purchase a house. What does a great opportunity look like? Well, I think there's going to be some fewer houses on the market, but the houses that are on the market, I would expect our list to sales price to get down to 95 to 97%, which may allow you to negotiate on certain houses and get a better deal than you get other times of the year. Once spring hits, I fully expect that our market's going to be back in full force, and we're going to continue to realize that 3-5% appreciation, if not a little bit better, depending what happens to interest rates. If you're looking under 600, be prepared to get aggressive on your offers. We're still seeing multiple offers on a lot of properties. Some of the higher priced houses still selling quick, still selling for that 98, 99% list to sales price, but there are some opportunities mixed into it. So keep your eyes open. It's time to get aggressive if you're really looking to buy a house. Sellers, a lot of homes are going to come off the market. A lot of people in October and November take their houses off the market and say, let's wait until spring. My advice, keep your homes on the market. The buyers are still looking, and it could be a time where you have less competition than you'd have otherwise. Also, although it's inconvenient to move during the winter time, it may be an easier time to negotiate selling your home and say making a contingent or working through the process to get into the next house if you're staying local. So if you have any questions, reach out to me. My name is Jeremy Williams of the Bannack Real Estate Group, and we love to hear from you. Call me on my cell phone. You can reach me at 406-531-1519, and I look forward to talking to you soon.